Stock Markets for Beginners, Part 10. This is going to be a quick one. We're going to talk about what technical analysis is, what technical analysis look for in their potential investments. We're going to show you how to actually buy a stock and the different order types, comparing a market order to a limit order. And we're going to do that real time right here so you can see an example. That way, now that you know how to value a stock and there's a stock you want to buy, you know how to actually buy that investment. So let's go ahead and hop right in. Now that we understand fundamental analysis when analyzing stocks, we need to talk about technical analysis. This is the type of stock analysis that someone like a day trader would use in order to find which stocks to buy and sell on any given day. Now, a technical analyst attempts to evaluate what will happen next in a stock's price by studying its past. They believe that the past price action can be very telling as to what could happen in the future, both in buying and in selling, betting that it could go up or could go down. Now let's talk common items taken into consideration when using technical analysis to determine what's going to happen next with a stock's price. The first one is price trends. Is the price of a stock trending upwards? Is it trending downwards? Is it trending sideways or flat? And will that continue into the future? The next is chart patterns. Many technical analysts believe that price action moving in specific ways can tell us what will happen very likely in the future. Then we have moving averages. What is the average price over a given span of time? That could be 30 days, that could be 200 days. What is the average stock price compared to the current stock price? Then we have support and resistance levels. A lot of times when you're looking at a stock, you'll see the price bouncing up and down on the charts. Let's say it's at $22 right now, and you've noticed at $20, every time the stock goes down to $20, it tends to bounce back up. That would be called a support level. Now, if it was at $22 and you've noticed that every time it hits $24, it bounced back down, that would be called a resistance level. And then finally, we have volume of shares traded. An increase of the volume of shares traded could mean that the volatility of that stock, the likelihood of it going up or down, increases as well, which means that stock could dramatically trend upwards or downwards as a result of that increased volume. So now let's say you've done your due diligence, you've dug into the financials of a stock, and you're thinking, you know what, I want to buy some of this stock. I think that this stock's going to go up. But how do you actually make a purchase? So we're going to discuss this. Let's discuss the top two most common order types. We have market orders and we have limit orders. By far, market orders are the most popular. This is an order to buy or sell immediately at the current prevailing stock price. Now, it's important to note that the last posted price is not necessarily the price that you'll actually pay due to market volatility and the liquidity of the market. It could fluctuate. Now, this generally is not a big deal, especially for smaller orders. You're likely going to pay within a couple cents of whatever the price says currently. With extremely large orders, then you can have prices executing at various price ranges or price points, and your order might not be exactly what it says on your brokerage. And then we have limit orders. A limit order is a buy or a sell order that will execute if the price reaches a specific number. So let's say the price of a stock that you're looking at is $20, and you want to sell some if the price happens to hit $25. You could set a limit sell order at $25, and then once the price hits $25, your shares will automatically be sold at that price point. Now, it's important to note that a limit order is not guaranteed to be executed, because if it never hits $25, then it simply will not execute. So in order to explain this further, let's go over to a brokerage, and I will do this step by step so you can see me actually making an order. And this is a brokerage called Webull. If you don't have a brokerage yet, if you're looking for one, or if you want some free stocks, they are linked down below. They actually have a promotion going on as of the recording of this video that gives you 2 completely free stocks valued between $30 and up to $2,000. It's more likely to be around $30, but hey, it's still $30 free. All you have to do is deposit $100 into your account, and they send you 2 free stocks, plus they send me a free stock as a thank you for sending you their way. So let's do a couple orders here. We have Palantir up. So in order to find a company, you want to type in the ticker symbol here. We have Palantir, and we're going to buy 10 shares as a market order. So we're fine with the prevailing price right now. We're fine to the price of $25.37. The time in force, we're just going to leave that on day. And then you just click place order. It's really that simple. If you wanted to sell, you would just have it on sell. It would sell at the prevailing rate if you happen to hold shares. And you just click place order. Now let's do a limit order. Okay, we want to buy 10 shares again, but we're going to do it this time at a limit price, let's say of $24. If the price goes down to $24, we want to buy 10 shares. That's effectively what it's saying. Now, time and force, we have some options here, either day or we can do good till canceled. With day, if the order is not executed by the end of the day, it will be automatically canceled. With good till canceled, it only cancels once you manually cancel it. So we're just going to leave it on day, and then you just click place order, and this would execute if the price dropped down to $24. Conversely, if we wanted to sell, let's say at $27, if we wanted to sell our shares, we would just type in 27, we'd leave it on day, place order. If the price happened to go up to $27, it would automatically execute that sell order. So it's not too confusing, it's pretty easy, especially with this brokerage, they make it pretty darn easy. Most online brokerages are fairly easy to buy and sell your stocks. Part 10 complete. We only have one section to go in this entire course. I am proud that you have made it this far. So we already know what a stock is, what the stock market is, how to value a company, how to actually buy a stock. Now let's say you bought a stock, you made a profit. In part 11, we're going to talk about the taxes that you need to pay and particular ways that you can lower your tax bill. So this is very important. If you plan to be a successful investor, you want to know a little bit about taxes. So we'll talk about that over in part 11. So make sure you like part 10, give this video a like, subscribe to this channel if you enjoy this kind of content and you want even more in the future, and join the private Patreon if you want even more exclusive content that is linked down in the description. And we'll see you over on part 11.